Joining me for this CEO Spotlight is John Wheeler, the Chairman and CEO of Wheeler REIT. John, thanks so much for joining us.
Good morning. Thank you for having me again.
Now let's start by talking about Wheeler REIT's third quarter earnings, which showed solid growth in operating revenue and income. What was behind those gains?
I would say mainly our acquisition, our pipeline, but also we worked heavily on G&A, our overhead, and we cut our G&A from $6 million down to $4.5 million on a pro forma run rate. So that with streamlining operations a little bit, we eliminated the COO position, but I think mainly acquisitions, and our pipeline, our product is tremendous, it's plentiful, and the more that we add to our foundation, the G&A will be disseminated through that pipeline, through those assets, as we allocate a certain percentage to each acquisition.
And for 2016, you set one of the company's goals as solidifying its capital structure. How do you feel about the progress that's been made there so far?
Well, we've done a little bit of everything. Obviously, the initial IPO, we've done follow-ons, we've done pipes, we've done several Series B, C, and D. Some of them are perpetual and some of them have conversion provisions in them. So as small as we are, we've kind of utilized every tool, if you can imagine. So where we were versus where we are today, capital structure, we're on a much better footing as well. And the main thing right now is to get our stock price up. Like all REITs right now, everybody's trading at a heavy discount to NAV, and we're just right there with them as well.
And looking at the broader U.S. economy heading into 2017, what's your chief concern with regard to the retail business?
Well, here most recently, rates have risen a little bit. Bonds have been bouncing around, been very spongy. Last Thursday, we closed on 3 deals. The interest rate was 4.75% fixed for 10 years, interest only. But then just yesterday, we closed on a transaction at 4.48% all in, 10-year swap with the spread. So just in that 3 or 4 business days, the rates dropped back down again. They kind of settled. From a retail perspective, our retailers are expanding and their same store sales are good and they're trending upward, especially with the grocery stores. And what we're seeing right now is more expansion from, let's say, Publix marching north or Wegmans marching south, or retailers like Lidl and ALDI coming in the market. Lidl is strong. They're the 3rd largest retailer in the world. So retailers in a good spot right now, and people have available spendable retail dollars to patronize our stores. And again, in our market, secondary and tertiary, they're not house poor, they're not car poor, and they patronize our shopping centers on a bi-weekly basis.
Great. Well, John, thank you so much for joining us.
Good. Thank you, sir.
For more from REITWorld 2016, be sure to visit REIT.com.